Lots to watch. Magellan, as you mentioned, up 13%. Let's bring in Chris Conway as well into the discussion. He joins us from Australian Stock Report, live out of Melbourne. Chris, good morning to you. No doubt it's been a long morning. Lots of stocks out reporting today that you have been watching. But in terms of the market and how we're digesting it all, how are you watching the ASX at the moment? We're up about 0.5%, 27 points. Can we hold on to the gains?
I think we can, Ingrid, but look, let's face reality. The performance of the index over the coming weeks will be absolutely dictated by how companies report rather than any of the macro themes that were touched on earlier. And just leveraging off some of the things that James and Adam have just said, this is why I love being a trader rather than an investor who has a full portfolio, is I can choose to, when I engage with the market or when I de-engage. And right now I don't have a lot of risk on. And I agree with James's point. A lot of these stocks that have run hard, if they don't smash numbers, they're going to get absolutely punished, and opportunities will flow from that. So, again, as I said, I like being a trader. I don't have to carry the risk into the results. I can just see how they report and then, ride the momentum that follows, if either they're good or they're bad. So, yeah, look, it's a nice place to be for me, and I don't envy some of the other guys who have to carry those risks into events.
James, how do you enter into reporting season then? I mean, from your perspective, you focus on small caps at the moment, and small caps are in a bit of a different position than some of these larger caps that have run up quite hard. But is it tough going into reporting season and positioning yourself for the results?
Yeah, I think, the key thing we're looking at is what's happened and where the money's flowed. And if you can get that right, I think going into reporting season, you can position yourself well. A lot of money seems to be flowing. There's a lot of big cap managers coming to results presentations from the larger end of small cap. Yep. They're not investing in the banks, they're not investing in Telstra. It's a big part of their index, so they're heading down towards the top end of small cap. So we see that as a risk. Those guys can flee those positions really quickly. They're a few basis points. So that could have a big impact at the larger end of small cap. So we're looking at the more value names, stuff that's growing. Might be growing a bit slower than some of the exciting stocks, but they might be on 10 times PE or sub-market multiple PEs. So we're positioning into that, and we think that's an area that if the money flows out of the big high PE exciting stocks, they'll have to flow somewhere. Fund managers are always 95% invested. That'll have to flow into that sort of middle bracket guys that are growing. Navitas, probably a G8, IPH, Speedcast is a great example. Things that are on really sub-market multiples.
Well, we'll get a bit of a preview there into what we hear from James later, because we'll get some of your hot tips a little later in the program, or at least what you're investing in at the moment. But I want to stick with Magellan for now, because obviously we mentioned that result, 13% rise for the stock today, $27.18, so a real stellar effort by that particular shares. But Chris, I want to ask you about Magellan. I mean, is this all on the dividend? Huge increase in the dividend. We know that obviously pleases investors, but the result was also pretty impressive.
Yeah, I think so. Look, I think the dividend increase, huge increase, 57%, is a reflection of obviously the operations of the company and the fact that they have continued to attract FUM. They beat on revenue, they beat on profit. FUM in the retail space was up, I think, 1.9, and Instos was 2.5 or 2.4. Actually, maybe reverse those numbers, but thereabouts anyway. So, exceptional growth. But as well as that, for me, it's more the qualitative factors. So we hold this stock in our long-term portfolio. We believe in management. We believe in the talent of the money managers. And we also really like the acquisitions that they've made over the last 12 months, which they've integrated those talented fund managers into their offering. So, yeah, it's not just the financial metrics, it's those qualitative factors as well. And, we like it. We want to be in it, and we want to continue to reap the results.
Yeah, Adam, they've made a bunch of strategic acquisitions as well. What's your take on Magellan going forward?
Oh, look, I like it. It's part of one of our portfolios that we basically put together for that international exposure or pseudo-international exposure, as well as then, they're great managers. The dividend is also very, very nice for clients as well. We've been cycling out of Perpetual and been putting it into Magellan. So we've been buyers of Magellan now for the last 3 or 4 months. So very, very happy today that the stock has rallied, and we're still holding. We're not taking any profits here. We still see that has got a good 6 to 12 months to run.
The risk of obviously we saw it with Kerr Nielsen, and we see the risk of having
risk.
yeah, exactly. And Hamish Douglas is obviously a big part of Magellan. I guess how do you look at funds when you look at the sort of Magellans and, you know, the Perpetuals and these sort of businesses? How do you look at them for risk going forward, and how would you invest in these ones?
Well, I think you've got to break it up into kind of legacy versus the newer operators.
Yep.
You know, I think with Magellan, it's backing management, really,
Yep.
isn't it? That's the wonderful part of you know, being interested in these stocks, is you get to know the management, you can see what they're like, look, sit across from them and understand. And I think Magellan has got, you know, the best managers and the best people in the business, and a great culture. You know, and Hamish doesn't seem like he wants to go anywhere. He's a young guy. He's not approaching retirement age anytime soon. And then conversely, you've got really complicated businesses. You know, you've got Perpetual has so many different line items. I mean, how do you actually analyse that business? So.
But when you're invested, James, in a company like this, you know, Platinum, obviously with Kurt Nielsen stepping down, handing the reins to Andrew Clifford, but I guess the question here is, if you're in a stock like Platinum and you know you're reliant on the key man in the job, or the key woman in the job, how do you mitigate for that risk? Because you can't predict what's going to happen with the key personnel in the business.
Well, I think you've got to predict. You've got to make a call.
Well, you've got to know that there's a succession plan in place as well, right? You've got to trust the whole top.
Yeah, and these businesses are getting really large. I mean, Magellan's a huge company now, so you know how important is Hamish to the stock price on a given day? Really important. Over 12, 24 months after that, you know, if he's got a good management team and people in place, less so.
I think it's the same as Warren Buffett. You know, that
putting
is
him up there.
Well, I mean, no, it's not that Hamish is like Warren, but there's key man risk. Yeah, and that one's getting really close to the pointy end of what is going to happen and how's the market going to react. So, yeah, something that you need to be aware of.
I mean, how long would you expect Hamish to be in that business? He could be there another 20, 30 years,
exactly.
Right? So that's probably a lower, on the scale of risk, that's probably Magellan's a lower one, right?
Exactly. All right. Let's talk Suncorp as well, and I'll bring you in on this, Chris. So obviously the result out today. We'll be actually speaking with the Chief Executive for viewers at home in about half an hour, so we'll certainly get a lot more analysis on it then. But Chris, worth getting your view. The stock's up about 5%, $15.76. Nothing like a bit of capital management as well here. A special dividend, a bit of a return to shareholders after post this deal, the sell-off of its life insurance business. What's your take on this one today?
There was a lot to like in this one. You'll forgive me. It is reporting season. There's a lot to remember. I'm going to have to refer to my cheat sheet for the line items that I did like. So their hazard costs came in less than the allowance. Their NPAT was a beat. Their digitisation project is moving well. They're servicing customers better at a lower cost. Gross written premiums are accelerating. Investment returns set aside for insurance liabilities, they've been getting a better return as well. On top of that, you add in the capital management, so it seems there was a whole host of things that went right for Suncorp during the period. So all in all, you look a really strong set of numbers. And just looking across the landscape, most brokers on this one to this point have either an underperform or a hold, and the price targets are, sort of about 10 to 15% away from where the stock is trading today. So wouldn't be surprised at the very least we get some price target upgrades, if not outright upgrades as well.
And a fresh yearly high for that one, $15.95 is where it reached a little earlier. But it is a regional bank. It is a smaller bank. It is under the pressure of, higher funding costs. We know they've already passed on rate hikes to mortgage rate holders out of cycle. How many risks, I mean, when you look at the regional banks versus some of the bigger banks, it's something you've got to keep in mind when you're investing in these stocks, particularly when they're running up.
Well, I suppose you look at it and say, where do you want to be positioned in banks right now? Do you want to be in CBA? Do you want to be in one of the big four? Or do you want to be in a challenger who's got, who can move some levers and actually, take some share? And, I think Suncorp's come off pretty well, all things considered, in Royal Commission. They've got the new marketing campaign. They seem like there's a lot of energy behind that business. You feel like that's pretty exciting. And then you look at the big four and you go, is there anything really exciting happening there? Is there anything that gets you, apart from dividends?
And they haven't come off lightly in the Royal Commission.
Exactly right. Yeah, they're probably not the winners out of the Royal Commission. I tend to, I like it on the regional banks. We're looking at a couple of smaller banks at the micro cap end. I think there's competition. These guys can adapt faster, less legacy, and their digitisation and their marketing is, I think, probably going to be second to none by the time they come out the other end.
And that's a key catalyst for those regional banks at the moment as well. Adam, what's your take?
Yeah, I mean, I've always liked Suncorp for the dividend for clients, and it's the diversification against the regional versus the big four.
I'd like it even more for its dividend today.
Very much so. However, it has, as Chris has just said, it has gone over our price target. Our price target was $15. It's gone over that. The analyst is looking at the numbers at the moment. I do worry about their cost cutting and if they can accelerate that through to 2019 and 20. So we just need to be a little bit careful on how that will sort of sit or play out. But overall, fantastic day for a stock that doesn't really move that much as far as this. So it's a really good
bounce. Yeah, $15.75. We haven't even really talked about the sell-off of its life insurance business. We'll get to that a little later, and of course we'll be asking the chief executive about that when we speak with him, as mentioned, in about half an hour's time. But Chris, before we let you go, I want to ask you about Newcrest. Switching gears altogether to the gold space. This is one we often look at. They've come out, obviously, updating the carrying value of some of their mine assets. How have you viewed this one today when it comes to the gold space in particular?
Well, viewed the announcement this morning as a negative, but much to our surprise, the stock price is up on the day. So, you know, when gold really didn't do anything overnight. So, market seems to taking it in its stride. It's not going to affect profit. Obviously, it's just a write-off. So, yeah, look, as I said, we didn't view it very favourably, but market doesn't seem to care.
I mean, Newcrest is the darling of the gold space,
Well,
really,
but it's also underperformed. You look at Evolution, you look at St Barbara, you look at all of these mid-tier guys. They've all had this huge trajectory. Newcrest has been sort of sideways trading between $20 and $22. So probably why the market is buying this stock today is that it has underperformed, albeit it has underperformed while the gold price has been going south as well. So, you know, it's a bit of a tough one, but yeah, carrying those assets and giving an update, probably clarity to the market as well.
James, do you want exposure to gold at all?
It's very hard in the small cap index to get. I mean, you know, Evolution was there, and now it's not. So very hard. We get our exposure via Index, which is you know, has a drilling facilities, and that's a great way to play it. It's very leveraged. You know, there's high operational leverage in those drill bits they deploy. So you can see huge activity in the exploration in the juniors. So that's probably a pretty interesting thematic coming up. There's a lot of money being spent. Index is seeing that, so we know there's big exploration in juniors.
Yeah, because it's hard to play gold more broadly anyway, even with the factors that play into gold, right? I mean, there's so many catalysts for gold. It's hard to sort of, even the gold price itself.
How do you predict it?
You can't. And the spot price itself, it's not even trading
Yeah.
in sort of characteristics you'd expect it to, as a safe haven, for example. Inflation, you've got a lot of issues to play into it, right?
Well, it's not really a safe haven these days.
Not
It's so
anymore.
speculative. So it's supposed to be defensive, but again, it's very hard to pick.
And then you've got currency as well.
Yeah.
And Aussie dollar gold's doing a lot better, right?
Yeah, absolutely.
Okay, we will leave it there with you, Chris. Really appreciate your time on the program. Thank you for joining us with a sort of a rundown on all those reporting season numbers. We'll check in with you a bit later. Thank you.
Thanks.
Chris Conway there joining us live out of Melbourne.